Hey Bowtie Nation, Joseph Hogue here, and all anyone can talk about in 2022 is the stock market crash. Investors have lost over $7 trillion in stocks, and bonds haven't helped save portfolios. But there are pockets of strength in the stock market, and 108 stocks in the S&P 500, about 1 in 5, are up for the year. In this video, I'll show you how to find the strength in the market, which stock groups and companies are beating the stock market crash. Then I'll reveal 7 stocks to watch leading their industries higher. We're getting started, but before we do, I've got to send that special shout out to all you out there in the nation. Thank you for spending a part of your day to be here. If you're not part of that community yet, just click that little red subscribe button. It's free and you'll never miss an episode. I'll be using the market heat map on the moomoo app to find the industries bucking the stock market crash this year. To use the feature, open moomoo and go to Markets in the bottom menu. You'll find the heat map option towards the top of the screen. Tap Filter to change the time period to year to date and see all the industries. The map shows each industry in shades of red and green depending on their year-to-date return. Now, looking at the map, energy stocks dominate with 4 of the 14 industries with positive returns this year. Now, I still like energy stocks for those dividends, but shares have come down lately with oil prices, so I want to focus on these other industries that could continue to hold up if the stock crash gets worse. We'll click through to each industry beating the market, see the 48 stocks with positive returns, and highlight the best 7 stocks I'm watching right now. I highlighted the drug makers in a recent video using research from the 2008 crash, and the group is up more than 5% so far this year. In that research, I looked at the stocks that beat the market when the S&P 500 lost 55% in the last crash and found pharmaceutical stocks all held up, with Gilead Sciences even posting positive returns over the period. And it makes sense, right? You need your heart medication even during a recession. Old people are still going to be sitting in bathtubs watching the sunset and taking their Viagra whether stocks are up or not. 11 stocks within the drug makers are posting positive returns so far this year, with some strong companies to watch in the space. Bristol Myers, ticker BMY, and Merck, ticker MRK, are both up more than 24%. Eli Lilly and one of my favorites, AbbVie, ticker ABBV, are both up double digits. Now, AbbVie is a best-in-class immunology drug company with a strong pipeline in oncology and eye care as well. In fact, most drug pipelines are easy to read on a timeline, but not AbbVie. The company has 32 indications in phase 3 alone, with sales from Rinvoq and Skyrizi alone expected to reach $15 billion through 2025. Shares here pay a 3.7% dividend and should continue to do well regardless of where the market goes. Also within the healthcare sector, stocks in the health insurance plans are up just under 1% for the year. 4 of the largest insurance providers are up this year, with Cigna up more than 16%, and of course another intuitive reason. While people may be at risk of losing their health insurance if they lose their jobs, it's usually the last thing people cut back to on a recession. And within this space, I like United Health, ticker UNH, for its scale and integration of services from insurance to pharmacy benefits and services. Shares pay a 1.3% dividend, and this one is going to grow at that consistent pace along with the healthcare sector. I'll reveal those other 5 stocks beating the market next, but I want to thank moomoo for sponsoring this video. moomoo is a commission-free trading app with the analysis and real-time market news to help you invest better. You'll get free level 2 quotes critical to making the best trades, and one of my favorite features here, a traders community of more than 18 million to get ideas and insight. This app is built for stock traders, but also has some great features for long-term investors. Features like a custom stock screener and news feed from CNBC. Use the link I'll leave below and get up to 10 free stocks worth up to $2,500 each when you start investing with moomoo. Property and casualty insurers have also done really well this year, up 5% year to date on that stable cash flow that comes with the insurance business. And this could be the strongest group in the market, with more than a dozen companies posting positive returns, 7 of them up over 20% for the year. Allegheny is up almost 25%, Progressive up more than 14%, and even lagging Allstate is still up more than 10%. And now, besides that relatively stable business model in the insurance industry, these companies are also benefiting from higher interest rates. You see, insurers have to invest those policy premiums in ultra-safe investments like money markets and quality bonds. This table shows the asset investments by U.S. life insurance companies, and you see 3/4 of that is in bonds, and all of these are very rate-sensitive investments. So as interest rates rise, they earn a higher return on those investments, and the profitability increases. Progressive is the 3rd largest auto insurance company in the United States and has more than 20 million policies across auto, home, and commercial. The company pays out a special dividend each January that accounts for the majority of its cash return. And that annual dividend has grown by 32% annualized since 2019 on sales growth of 16% a year. Non-alcoholic beverage makers are also up this year, even as consumer spending looks like it might start to weaken. Now, returns aren't quite as broad here, but 6 of the companies in the industry are posting positive returns, and even those with a negative return are beating the market. You've got Coca-Cola up 9% this year with its 2.7% dividend yield, and even Pepsi, which is down but by less than 1%, is protecting investor portfolios. In that research on stock returns through the 2008 crash, we also found the alcoholic beverage makers did really well with stocks like Brown-Forman and Diageo protecting investor money, but these non-alcoholic beverage companies have a little better diversification across snacks that helps the group do even better. And I've got to admit, while I like the taste of Coca-Cola better, I've got to go with Pepsi, ticker PEP, for its valuation and better sales mix between snacks and beverages. The company books half of its sales and 65% of its profits from the snack divisions, which means they're higher profitability than that beverage component. Plus, shares offer the same dividend yield and trade for just 2.9 times sales versus a valuation of almost 7 times sales for shares of Coca-Cola. Another group of stocks in the healthcare sector here, medical distribution companies posting positive returns this year. You've got the largest companies in pharmaceutical distribution and medical sales right here, with 6 stocks all producing positive returns and McKesson up 29% year to date. So what you want to do as you're thinking about what stocks to buy to protect your portfolio, you start to see these trends in industries and sectors with sales that don't fall in a recession, especially things like these healthcare companies. Cardinal is one of my favorite forever stocks, up almost 3% so far this year and pays a 3.7% dividend. Between AmerisourceBergen, Cardinal Health, and McKesson, these 3 companies alone control 90% of the pharmaceutical wholesale market in the country. Even if we do see some true enthusiasm for drug price controls from the government, which is a long shot to start, and I think it's likely this industry can negotiate a compromise that still maintains solid profits while moderating those price increases. We still got 2 more groups of stocks beating the market, but I want to get your input on this as well. What stocks are you buying for returns in the stock market crash? Which groups or individual stocks do you think will hold up best? So scroll down and let me know in the comments below. I highlighted food distributors in a video earlier this year as companies with a strong anti-recession protection. 4 of the stocks in the group are up for 2022, and even the laggards are down less than the overall market because of contracts that allow them to pass on food inflation costs to their buyers, keeping that profitability intact. Cisco, ticker SYY, is already up 10% this year, but has a strong trend behind it that could push further gains. The company is the leader in food distribution to cafeterias and restaurants, so should continue to benefit as everyone gets back to the office and gets out more. Now, this next one is a controversial group, but the tobacco stocks are also up this year on those stable cash flows that come with this business model. Nation, people don't quit smoking just because the stock market crashes or the budget gets tight, and 4 of these stocks here are in positive territory, with giant Philip Morris International up 5% on the year. Now, even though it is negative for the year and underperforming the group, I like Altria Group, ticker MO, at this price. The FDA recently ordered the company to remove its Juul vaping products from the shelves, but Altria sued to get a reprieve while it fights the decision in courts. Now, it did seem pretty arbitrary that only Altria was signaled out while other companies were allowed to keep their products for sale, so I think the company wins a settlement on this one. The shares pay an 8.6% dividend and are relatively cheap because of that bad news. Check out moomoo with the link below and get up to 10 free stocks when you start investing. Or click on the video to the right for the best Warren Buffett stocks to protect your money. The best value stocks to buy right now. Don't forget to join the Let's Talk Money community by tapping that subscribe button and clicking the bell notification.